Toba Ashowamima is joining us from FSDH Merchant Bank. He's a fixed income dealer live to us from FMDQ's marketplace in downtown Lagos. Toba, it's good to have you. Good morning. Welcome to the program.
Good morning. Thanks for having me.
This is your Treasury bills market practically on fire on Wednesday. Drill down on this primary market auction for us.
Okay, so yesterday we had the primary auction conducted by the DMO, and it's been a continuation of the trend that we've seen in the previous weeks. We had a total of 150.6 billion on offer. There was significant demand, over 254% subscription, 533 billion was the total amount subscribed for. The DMO sold only 150 billion. This demand led to a significant drop in rates by about 157 basis points on the average. The 91 days dropped from 7.998% to 6.495%. The 182 days dropped from 9% to 7.23%, which was the largest drop, while the 364 days dropped from 10% to 8.37%, which means that these are the lowest rates that we've had for over 3 years, since 2016.
Yeah, it's the lowest over 3 years. So how much lower do you think the yield curve will go, this yield curve turning backwards? How long do you think this will be sustained if you take some signaling, whatever it is, from what the Central Bank Monetary Policy Committee decided and read out on Tuesday?
So basically, it's just it's a game of demand and supply. So far, investor appetite remains high, and they feel that the rates are okay. Then we would still continue to see that demand, and that would have an impact on rates. However, there's a breaking point to that. But right now, the investors still feel that based on the demand that we've seen in the primary market, it's very obvious that the investors are still very, okay, this rate is still important, it's still interesting to them, it's still positive.
Yes. So at the secondary window, I'm looking at NTBs of about 7.2% already, about 6%. Where do you think that bottom will likely be, that support level at which investors will feel, well, I think we think this has gone really low enough?
So I can't put a definite rate to it, but just like I said, amount sold was only 150 billion, which means that there's still over 350 billion of that demand that wasn't met. So investors still say, okay, let's go back into this NTB auction and bid. It depends on that level. Is not for me to determine, to be honest.
Yeah, folks are asking everywhere, where is the bottom line? I'm trying to just try and find out at what level we will say that the yield curve had bent enough to accommodate MPR and inflation reading, which everyone says we're still likely going to see 12%. That's the forecast from the financial regulator between now and Q1 next year. So we're entering December on Monday. So what's your take on the market moving forward, the debt market?
On the debt market moving forward, there's still, like I said, there's still significant demand across securities. And this this isn't based on the demand in the NTB auction alone. Even at the last auction, the bond auction, we still saw that there was a lot of demand. So in the treasury bills market, in the bond market, there's still significant demand, and we still see investor appetite very, very high.
Okay. Thank you so much, Toba Ashowamima from FSDH Merchant Bank. Thank you so much. Have a great day, and see you very soon on the show. Thank you.